I see the TTM squeeze not only as a breadth indicator for when price action has squeezed or when price action has flushed. I also look at it to see it as a fuel indicator. And how I see it as a fuel indicator is that, when we get a pullback, let's say we get a breakout, right? The way we got a breakout here. When we got let me remove this line here to make it less confusing. So once we had the breakout here, we discussed that Tesla would come back down to retest this potential breakout retest. So this is a breakout over here turned into support. Once you see this behavior, when a stock is trending and you see this behavior and you see the TTM squeezes going from like red to light green, like basically showing this sort of behavior, that tells you that the stock still has fuel and that it's going to squeeze higher. You're going to see this. Sorry? Exactly. Yes, sir. It's pretty much it's setting up for a charge. So when the TTM has reset like that, right? What it tells me is that price action went from like cooling off to firing the red squeeze, and bears weren't able to do anything. Once you see that the bears weren't able to do anything, and you see a massive demand candle taking out the supply, and you see the TTM squeeze showing that there is a lot of fuel, that is the cleanest signal you can get that there is a lot of fuel remaining on the particular price action that you're trading. And team, like I used to tell this to price action traders, right? Those that brag, indicators are useless. Oh, I don't use indicators. I'm too cool for indicators. You know what I always tell them? You are missing out big time if you are not using the TTM trend, because like I feel blind without it. Like I understand price action, right? I mean, we made a whole course on higher highs, any sort of market structure. We know all about that. But what will really clear things up and tell you whether a higher low right here, this was a higher low, whether a higher low has fuel or not, you're going to get it from the TTM squeeze. The TTM squeeze will tell you whether there's fuel within that higher low structure or whether there's no fuel. You guys get what I'm saying here? So I honestly just laugh when I hear a trader saying, I don't use indicators, blah, blah, blah. Like, yeah, I understand. Indicators are lagging indicators, whatever. I personally don't use them myself. But I'm telling you, the TTM squeeze or the TTM trend is a must. It's a must because, for this reason, it's a must because it tells me when there's fuel. It tells me when the flush has taken place and that price action is ready to be, basically price action reset and that it's ready for the next trend structure. It tells me all that stuff just off of this, and I just love it. So again, this just was phenomenal. You can see how we fired a short squeeze already taking out the high. So just beautiful price action, honest to God, beautiful price action just off of understanding the TTM squeeze there. And now I'm using another price action based tool, and the other price action based tool is the RSI reaching 70%. So when the RSI reaches 70%, right, what that tells me, if price action is in an uptrending structure making higher lows and higher highs, then that tells me once the RSI stabilizes above 70%, it's going to trigger what is known as a melt-up operation, and that's what I will be expecting on this price action. I'm not saying it's going to happen, but the same mentality that we used on SPY here, saying that we're going to get that melt-up operation. You can see we got that melt-up operation. So same logic, same thing, and that's how we use our RSI. Now you're gonna hear traders, right? A lot of traders will say short as soon as the RSI reaches 70%, but that's really not true. When price action is in an uptrending structure, the RSI reaching 70% signifies that there is going to be what is known as a melt-up operation. And the melt-up operation is the short squeeze that you see with really massive candles. something like that, something you see on SPY like that, where price action just continues to grind higher. And you're gonna have traders like asking or freaking out like, what the hell, man, RSI at 70%, why is it going up? That's because they don't understand how the RSI works. It works differently when you're in a downtrending market, and it works differently when you're in an uptrending market. Like if we go to the 5-minute time frame, it's just clearly like it already did it. You know what I mean? Like if you look at it right here on the 5-minute time frame, that's when SPY had its overbought RSI, basically signifying that melt up we discussed. So just from the melt up operation right here, we went from 407 to 409, and that is just strictly off of the melt up operation, you guys. Let's go to the 5-minute time frame. Tesla really hasn't had it, and it shows because it's holding up really well. But yeah, you can see why we didn't get it this time on the 2-minute time frame. That's because it's already way too overbought on the 5-minute time frame, and that it's cooling off. But yeah, we're gonna see the examples like that, team. We're gonna see examples like that where price action will just work out beautifully because because we will catch it early on. I mean, even looking at it on the 2-minute time frame, it already had its melt up right over here. Like you can see the melt up began right here at 407.50, and price action is at 409.20. So this melt up has already played out, and that's why price action is cooling off. But do you guys understand so far how this works? Again, the reason why this particular one didn't work out here is because we have already fired one here. You can see. I didn't see it earlier on. I wish I had seen it, but this is what I mean, you guys. From 407 to 409, this is what's going to happen anytime you have a short squeeze. So can you guys tell me why you would have been confident on this trade setup right here? Can someone explain to me why they would be confident on this trade setup here, taking this trade setup? Can anyone explain this chart here? Yes, sir. And would you like me to point out a few other key factors here? All right. First of all, we have a resistance. What happened when we reached resistance? We printed a massive breakout candle, right? A massive institutional candle. But we knew that this can potentially break out just when we reach right here, because the RSI was already above overbought. So right around these ranges, we had already figured out that this was going to go higher. And if you had gotten here, which is where we entered the Tesla trade based off of SPY strength, off of the rally-based rally, you would have greatly profited off of that major move up. You guys remember this earlier when we were mentioning it, right? When we said that SPY is doing a rally-based rally. Right off of the wick, consolidating above the wick. This is what I was talking about. Since price action was consolidating above these wicks, this told me that there is clear demand, and that we are going to break out above this resistance because of the way we were behaving above these basically, for example, if I draw this line above the previous resistance, right, where supply was, look how these candles were trading above it. So this is what gave me confidence that despite bulls printing, despite bulls leaving these wick candles showing weakness, I'm still confident because we are closing above the previous supply range, and that's what we saw here. So once we got above, the 70% overbought, I mean, my gosh, you guys, look at this. The candles are much bigger than they are here. We have discussed this. The melt up candles are much bigger than the usual moves. And that's how pretty much you use the RSI to take, to trade price action. Ever since I learned the melt up and the meltdown operation, it has been a significant game changer. Also, team, to point out something else, if the market is in a downtrending condition, what do? You do not buy RSI at 30%. We have discussed this, right? When the market is in a downtrend, you do not buy at the 30% RSI. Instead, what you do is you're going to short the small bounce that comes from the 30%, which would be somewhere around here at 407 all the way down to 405. This would be a short trade because the RS is just as I said, the RSI at 30% in downtrending markets does not signify a buy signal opposed to if you found it in an uptrend. Instead, it signifies further selling in what is known as a meltdown operation, and that's what we are seeing here. And yeah, so just keep that in mind, team. The only time, and what do you do when the RSI is at 70% when the market's in a downtrend? You short at 70% RSI, and you can see this trade would have worked out perfectly if you had shorted off of the 70% RSI because the market was still in a downtrending structure, hadn't broken any structures yet. So yeah, that's how you pretty much sorry about that. That's how pretty much you trend the 30 you trade the 30% RSI at in downtrending markets. Also keep in mind, team, when the market is in an uptrend, you buy when price action reaches 30%. Okay, this is because if the market's in a downtrend, the 30% RSI, the 30% systems will have their what do you call it? Their buy systems to buy at the 30% RSI. The time frame is too choppy here to show, but that's what you're going to see in most cases. Like when the market is in an uptrending structure, as you see here, you can buy the 30% at or close to the 30% on RSI. And if the market is in a downtrend, you short when price action reaches the 30% RSI because that signifies further melt up operation. So the S&P 500 on the daily chart on the 4-hour time frame was in a downtrend from 480 all-time highs, right? So now let's go take a look at how this played out. If you had shorted at the third retest of the bear market line at 70% RSI failure, this would have worked out as a perfect short trade because, again, as we have mentioned, when the market's in a downtrend and you are near the 70% RSI, you short it. And what do you have? When price action reaches 30% on RSI, which we did right here, right? We reached 30% RSI since the market's in a downtrend. What happened? What happened when we reached 30% RSI? We got the small bounce, and what happened to the small bounce? The small bounce was shorted the crap out of it. Basically, they shorted the crap out of it. So we went from 30%. If you had bought at the 30% bounce, you would have bought at 396, missing out of buying the dip all the way at the 350 area, you guys, 355 area. So if you had waited for the RSI to really flush, you would have basically had a really nice trade, and that's what I want you guys to do. I want you to understand the concept. When the market is in a downtrend and price action reaches 30% RSI, do not buy as others say. Wait for the bounce, observe the bounce. If the bounce is weak, you're going to short the bounce, and you're going to expect a lower low structure to be made, which is a meltdown operation. Again, team, when the RSI when price action is in a downtrending structure, you short at 70% RSI, and you do not buy at 30% RSI. You instead short the bounce of the 30% in anticipation of a lower low to come, what is known as a meltdown. So this is what you are seeing here. This is why 30%. If a trader bought at the 30% RSI here, thinking that this was a big drop, they basically got burned because market went down much lower. So, I'm sorry. It bounces, but it's a fake bounce. I'll show you another example. Sometimes it may not even bounce. For example, we're gonna look at Tesla daily chart, right? If you had bought the 30% RSI on Tesla back in 160 area, you would have got screwed really hard because even here, like when price action reached 30% RSI, when the market was in a downtrending structure here, that leads all the way back up to all-time highs. If you would have bought at the 30% RSI touch here, you would have bought at 237. And do you know where the stock actually bottomed out after the whole insanely meltdown operation? It bottomed out at $100. It dropped $157 ever since the RSI at 30%. So this will really save you a lot of headache and a lot of a lot of fake dip buys if you understand how the RSI works. You guys see how the RSI at 30% was shorted, right? From 268 all the way down to 106. Same thing again. When the RSI reached 30% again, we had some consolidation. In this case, we didn't even get a bounce. We just went all the way down another $60. Now let's take a look at how it behaves when it's in an uptrending structure. So you guys see how this trend structure was broken here. This downtrending structure was broken here, and the RSI reached 70% after this consolidation. Look how it melted up. It melted up from $143 to $222 just during the melt up operation. Like, oh my gosh, like most of the big move and the big candles actually happened during the melt up operation. Like once you actually understand how the RSI works, it's a super duper game changer, because once you have clean breakouts, let me show you exactly what I mean, you guys. Like we had where is it? Like if we go back to SPY, right? If we go back to even SPY on the 2-minute time frame, sorry, on the 2-minute or the 5-minute time frame, we literally are seeing exactly that, but with a what is this called? With a not horizontal, with a horizontal support. So you guys see what I mean? With a horizontal, this one happened instead of a like a downtrending kind of breakout. This one broke out just above resistance, which is the same. Support and resistance comes in horizontal and trending lines. So you see how we got above 407, right? Right at the and that's right when the RSI went to the melt up operation. You can have confidence, especially when you see something like that, right? You can have confidence that this is going to lead to a melt up because the RSI is there, blah 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 blah, and so forth, you guys. And that is because we broke a downtrend, and that's what I mean. That's how we will try to take advantage of these opportunities going into the future. Again, since the market was in a downtrend here, RSI reaches 70%. What happens from there? It basically is shorted. Sorry, you said ABNB? I see. So with ABNB, again, team, let's take a live example right here on ABNB. Look how I'm literally saving us from buying these fake dips, man. If we would have bought the dip, the old me, right? I promise you guys, a 4 months ago me would have bought this dip right here, you guys. A 4 months ago me would have bought the dip here and would have got screwed. You know why I would have got screwed? Because the RSI, the market's in a downtrend, right? And the RSI reaches 70%, 30% oversold here, right? Right here reaches an oversold, and guess what happens? I would have bought the dip, which is the small bounce, and guess what? I would have been devastated after price went from 111 down to 107. And guess what? It was shorted right at 70% overbought because the market is still in a downtrend. Well, in my opinion, that should have been somewhat of a breakout, but you do have a massive supply candle, so I can see why this didn't break out. Let me tell you, if this had happened during an uptrending structure where this was in an uptrend and prices had gapped up and basically came down, sold off right at open, and had formed this setup, I would have been confident saying, oh, this is going to go much higher because price action was in an overall uptrend. But because this is kind of in a downtrend, you can see why it's it's shorted at the 70% overbought. Like, honest to God, Paul, all time frames work pretty much the same way in respect to their charts. What I mean is, like, if we notice it happening on the bigger time frames, it will take place on the bigger. For example, looking at this one, this happens on the 1 hour time frame, and if you really line it up, it happens just at a resistance breakout of a structure. Like, look at this, look at this. If we come here, look how it perfectly happens. Like, this hourly time frame, you see this breakout candle on the hourly time frame above this resistance line. If you go to the 2 minute time frame, SPY is playing this out literally in the same way. The same way, if we go to the 2 minute time frame, it has the same breakout candle, sort of, but it's on the 2 minute time frame. Usually, when I see these massive breakout candles after like a third retest or a fourth retest at a supply or a resistance, then I would look at the RSI for that to happen. To answer your question, Paul, I think we should really look at it for all different time frames, because as we know, each time frame really speaks volumes on a different perspective. Like this one in particular, once it got above, it pushed price from that breakout from 401.62 all the way to 407 on the hourly time frame. Baba? Oh my God, Jesus Christ! Even on the 4 hour time frame too. Wow, what time frame were you looking at? Sorry, Paul. Oh my God, I'm looking at the 2 minute time frame. Easy, look at this, dude. Look at this. Like, as soon as we right over here. Oh my gosh, dude, that's crazy. That's on the 2 minute. The 5 minute probably looks much better. Yep, look at the 5 minute right at the structure break. I bet you, like, ever since I learned this, I can tell. I can definitely like be able to get an idea of where I think they will do it too. Always above a resistance structure. The old me would have never been able. I'm sorry. I see. I see. What a beautiful move, by the way, man. What a beautiful move. Look at that. The candles are just so much bigger on that melt up operation, man. By the way, team, I recorded that video, so I'll put it up on YouTube. It's a 20-minute video just for anyone that wants to go back to it and try to study that RSI. I didn't do a good job at explaining, but it's fine. I'll just put it out there.